right-click, click on Add Indicator/Strategies, or click on the Indicator/Metrics/Strategies tab, search for RSI, Relative Strength Index. You can see on chart that RSI indicates where an asset is overbought, 70 line on RSI, or oversold, 30 line on RSI. Since this RSI indicator is not pre-built, you will need to adjust the input data. I always put my colors the exact same way on any chart so there is no confusion. If you need to change any input criteria, you will just need to change the length equals 14 and /OR7. Some charts let you have both on. RSI equals white, can be any. RSI base M8 equals red, can be any. Upper band equals 70, OR 60. We'll explain later why. Middle band equals off, can be either 60 OR 40 if you want to leave your bands at 70-30. Lower band equals 30, OR 40. We'll explain later why. Band colors equals white, can be any. RSI background equals off. MA type equals SMA, or EMA, but not needed. Line thickness equals thin as possible. Application equals close. RSI is used to determine when an asset is more likely to correct based on momentum. You can see on the RSI indicator that the candles start to slow down and correct in the opposite direction when the asset is approaching closer to the 70/30 levels. Important, there are sometimes huge movements when the RSI approaches the 70/30 levels. This push indicates that momentum is trying to get past a resistance or support area. Be on the lookout for potential plays. Always chart from higher timeframes to lower timeframes, also known as top-down method. Your higher timeframe indicator data will always be more stronger than your lower timeframes. Remember, higher timeframes equals harder to break trends. The more collective data you have, the more resistant that asset will be from breaking out from that trend. Works on any timeframe, but it works best on higher timeframes. Movements are more obvious if you zoom out and see the bigger picture. This occurs on every time frame. You can see that the candles are able to correct at both upper and lower levels. If you're seeing the asset has already passed the 70-30 level on the RSI, then you should use a higher time frame. Sometimes an asset will easily go past those levels on a lower time frame, but has not corrected yet on a higher time frame because IT has not reached those levels yet. Make any last-minute adjustments so that your charts/indicators correlate and line up correctly. I recommend fine-tuning your indicator on the higher time frames first. You will need to adjust your length accordingly so that the candles reflect the right correction in the opposite direction. Some chart indicators will allow you to set up your upper level as 70, middle levels as 60-40, and lower level as 30. If you are able to do that, you can see where the RSI will attempt to bounce between the 70-60 and the 40-30 levels. The reason why I chose 60-40 for the upper and lower bands is because IT gives you an advantage to exit earlier to secure profits rather than wait like other traders, so you are not caught when the asset needs to correct. Try out similar indicators to see if it's easier to set up, but a majority of them are unique in their own way. Some have more options and some are already pre-built with limited room for manipulation. Remember, an indicator is only a reference tool used to make charts easier to read and decipher what has already happened. This means we can use indicators to make better predictions on what is ideally supposed to occur next. Let's learn and make money together. Please like, subscribe, and hit the notification bell. Please leave a comment on what you want to see more of. Instagram, trade_secret.